In this video, we are going to be talking about a simple directional bias news trading strategy. So basically what is news? There are those releases that are issued from different countries to give us an idea of how their economy is performing. However, how do we actually predict something like this, a spike candle to the upside or a spike candle to the downside? In this case, there was a news release on NFP or non-farm payroll, and there was a spike to the downside like that. How could we know this was going to happen? That is what we are going to be talking about in this video. So sit back, relax, and learn. All right, before we talk about anything, we need to have a little bit of some explanation. Firstly, the market is governed by the market makers. And in our case, we trade what we call the institutional market maker method. A lot of people comes in the comments section to ask if I ever lose trading that particular strategy. Of course, if ever anyone tells you that there is no loss within their strategies, there will be 100% lying. So losses and profits must have a relationship. So I'm just highlighting this so that we will be on the same page. So what is the market maker method? We have what we call the market maker cycle. A market maker cycle has some components: peak formation high, peak formation low. In doing so, these 2 points are separated with what we call levels: 1, 2, and 3. And for those who have been following this channel for quite a long time, or who have watched several videos that we have uploaded, know that if we have something like this, we now have what we call a completed market maker cycle. So in that case, we are saying the market always looks to complete this cycle. However, the market looks to do it in a wise, clever way to trap, hit stops, and frustrate traders. At some point, you would actually ask yourself, what are you doing? So with that in mind, Forex is in Forex trading, news releases are used to complete cycles. What do we mean by that? If a release is issued whilst we are on this first impulse, we have an idea that the news release that are coming are going to issue us level 2. That is the same as if the news is released at level 2, we would expect to see a level 3 like that. Therefore, the summary of everything that we are going to talk about is news releases are used to complete the cycles. What now matters is, are you able to count levels properly? Levels are much difficult than this template that I've given you, because there are time frames that intersect with each other, from the higher time frames down to the smaller time frames. To have a clearer explanation, let's now go over the charts. But before we do so, check out our free Telegram channel. I'll leave the link in the description box below. So this is odd against dollar on the H1 time frame. I'm just going to have a point out of where the market was completed its cycle using fundamentals. In this case, we can see that on the H1 time frame, we had a very big M pattern, which actually came from completion of the H4 time frame. On the H4 time frame, we can see that the market completed its cycle. The market maker cycle on the H4 time frame was complete. So after that, we are now in a process of looking for sales, or in other words, we are saying shorting now has more probability of occurrence than buying, right? Going on the H1 time frame, we were still going up before the FOMC report. So on the H1 time frame, what can we say, or what can we see? We can see that before its release, we had been issued the first impulse to the upside, which was this one, right? Before the news was released as well, we were issued a second impulse, which is this one. So this was an idea that we now had that the FOMC is going to hit stops. Since it's a report, it's going to hit stops, clear the board, and move to complete the cycle, right? In this case, we saw the market actually completing the cycle like that. Therefore, news is used to complete the cycles, right? From there, we can see we reached what we call the peak formation high, as I have shown you on the market maker cycle template. Then from there, we started again. We had the first drop to the downside. This was also a glimpse or a hint that news was going to come in the downward side. Why? Because we were on the H4M pattern like that, and we were now looking to have another cycle going to the downside. NFP was released, and NFP came with very, very unexpected huge numbers. Therefore, the market went down right away like that. So it was used to complete the cycles, and the cycle was actually issued like that. 3 levels of drop, we reach what we call the peak formation low in this case. A peak formation low was issued or was reached, which is this one. From there, we know that after 3 levels of drop or rise, we expect to see a market reversal. The market was actually reversed, and Australian dollar interest rates was announced. Where did they go with that? They actually moved towards what we call a reset, which was an upward move like that. So the market went to complete that particular small cycle to reach a reset. So in short, we are saying whenever there is news coming ahead, always know where you are within the cycles. You'll be like someone who is predicting the market, but you are just using this small concept that they use news to complete the cycles. On that note, we come to the end of this video. Thank you for watching. Like and subscribe.